Good morning. This is Dylan Jovine from Behind the Markets. It is Tuesday, August 6th. Woo! This market's getting tight. It's funny. This weekend, everybody got news that Buffett was selling. Buffett reported that he was selling his Apple stake, and he basically sold slightly under 60% of it so far in the first 6 months of this year. And they were really shocked that he sold half of his position basically in the last 90 days. And, this is part of this larger theme that I've been talking about that, smart money, and by the way, the Buffett announcement kind of smacked a bunch of people awake. It was really kind of surprising. If you would have watched CNBC the week before, everybody's predicting the S&P 500 ends up, 20% higher than it already is. And then something like the jobs report, which we saw at the end of the week, that came in a little bit weaker than expected. And then Buffett selling this Apple stock kind of slapped everybody awake to some of the things that are happening in this economy. These are things that we've been talking about for a while here. So, why did Buffett sell his stake? Nobody knows why Buffett sold his stake, but I will tell you this. He's a sophisticated investor who understands price and value, So we don't know why exactly Buffett sold his stake, but we know that, these stocks have been so incredibly overvalued. And, a lot of that value has been driven by excess government spending, as we have talked about. So we find ourselves in a market that, that is really just kind of correcting a little bit. And look, the market was really high. These stocks were really, really high. So I thought to myself, the reason I made this bearish call last month is I thought to myself, what kind of upside do we have? 5%, maybe? We go up another 5%. It's just seemed more likely the downside was a heck of a lot greater than the upside. And I started watching those earnings reports come in, and the earnings reports were very, very underwhelming. So, why did Buffett sell Apple? Who knows? But we know that a lot of professional investors have been unwinding their AI and tech trades in the past few months. And, we don't have a crystal ball. We can't foresee the future. But we know price and value. If there's one thing that I've learned over the 30 years I've been doing this is price and value. There's a difference between price and value. And basically the price exceeded the value of most of the stocks that I was watching and looking at. And that meant that it was time to sell, which is why we have been such aggressive sellers, in the past few months. So far this year, we've sold over 53 different positions and we've done great. And that's exciting. But the question now is, what happens now? Well, a lot of people are coming out and saying that, that the Fed looks like it's going to run an emergency rate cut of 5%, which would be really strange to me. Powell basically said, we're going to look at the data, but not any single data point. So if he actually ran out and did an emergency rate cut in an otherwise fairly decently healthy economy still, it would smell like a panic. And it would contradict with what he said. So I don't expect Powell to go out and rush a rate cut, but I do, certainly not based on the unemployment data, but I certainly expect him to look at the CPI, this month, and that could really change things. If he sees that consumer prices have actually come down and that inflation is really solidly below that 2.5% to 3%, depending upon which measure you look at, then there's room to cut rates. But, the worst case scenario here for the Fed is that we're entering this stagflation kind of area where people talk about what a nasty word that is, isn't it? Stagflation. Well, those of you guys old enough to remember stagflation, you think Jimmy Carter, you think the 70s. It's where inflation is too high and growth starts to stagnate. So inflation's too high and growth starts to slow. And, I think part of this market panic has been because people are worried about that. But, we're in the early innings of this game. So I would just say hang tight. We've already made our moves. We've trimmed, at least at Behind the Markets. We've trimmed our positions, our most risky stuff. Anything else that we have that's in the higher risk category, I feel pretty comfortable with. I understand those businesses. I understand their capital structures. I understand the longer term opportunities with them. So, but, I feel fairly comfortable with what we have. And one of the things that I wrote about in Midnight America, the book and the documentary that we put out, was basically trying to help you take 4 steps you need to take right now to profit from this market panic that we may find ourselves in. It's a little too early to say, but we may be entering that depending upon what happens going forward. It's too early to say still, though. So hopefully you've taken your other accounts, your other positions, not at behind the markets, and you've made the adjustments that you've had to make accordingly based on the instructions that I laid out in the book, the 4 steps that I laid out in the book. Anyway, I hope you have a wonderful Tuesday. God bless you.